Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hey everybody, this is Dave Bartosiak. I want to welcome you to this week's Top Stock Picks of the Week video. I've got one for you, and then Nina Mishra will have one once I'm done. So let's go ahead and kick things off by taking a look at Zacks.com and checking out Vita Coco, ticker COCO. Vita Coco is a Zacks rank #1 strong buy with a Zacks value style score of D, growth of A, momentum of B to help it round out with a VGM composite score of B. The beverages, soft drinks industry is in the top 15% of our Zacks industry rank, so we've got a strong stock within a strong industry. Let's take a look at these estimates. So current year, 9.95% revenue growth. Next year, 8.78. Translate that over to the EPS side of things, it looks even better, 178% EPS growth this year. Granted, that's coming off of a small number, right? Only 23 cents a year ago. But when you look over to next year, it's still 33.85% growth for next year, bumping that up to 85 cents. What's been happening with estimates recently? Well, over the course of the last 60 days, you have 3 analysts up in the ante for the current year, 1 for next year. That's moved our Zacks consensus estimate from 50 cents to 64 cents for the current year, and from 70 cents up to the aforementioned 84 cents for that year as well. So that's looking pretty good there on 2 of those. One last thing I want to check out, guys. This price consensus and EPS surprise chart, always my favorite chart on Zacks.com. You should definitely make use of it. This one, you got to zoom in a little bit because we really only have history going to the middle of 2021. That's easy to do. You just press that plus over there on Zacks.com and then go ahead and just push over to the right, give you a little bit clearer of a picture. The black line represents the price, which corresponds to this right y-axis. The multicolored lines represent the evolution of our Zacks consensus estimates, correspond to this left y-axis. And then the little arrows, the greens are earnings beats, reds are earnings misses. So look at the recent momentum here with earnings ticking up for fiscal 2023, fiscal 2024 off of a recent earnings beat. That's a pretty good combination there with earnings beats and estimates moving in the right direction. So that's why my top stock pick of the week is Vita Coco. So there you have it. That is my top stock pick of the week. But Nina's got one for you. Nina, what do you got going on?
Thanks, Dave. I'm Nina Mishra, and my pick today is Palo Alto Networks, which we know is a network security provider. And cybersecurity is an area where corporate spending remains high. There are many other areas of technology where companies have reduced their investments, but because of threats of cybersecurity related threats, spending on this area remains very high, and we are likely to see increased demand for cybersecurity related products and services in the coming months as well, even if the economy slips into a recession. And that is, as I mentioned, according to rising threats. So Palo Alto Networks, this company reported excellent results recently, beating on both the top and bottom lines, and the results also exceeded, they improved year over year. The company also raised its guidance for fiscal 2023. And in fact, it now has 3 consecutive quarters of profits, which means, according to the company, that it is eligible for inclusion in the S&P 500 index. And actually, it had laid out its profitability goals in 2021 in an investor presentation, and it is now 3 years ahead of its goals, which were laid out in 2021. And so that is why this stock has seen a lot of interest from investors. Now let's take a look at some of the charts by going to the code page on Zacks.com. So Palo Alto Networks, the ticker symbol is PANW. Currently a Zacks rank #1 strong buy stock. Looking at the style scores, F for value. Why? Because it is not cheap, but A for growth. And here you can see Y, F, and A. So the stock is up about 37% year to date. And as I mentioned, it's not cheap now because of that surge. It's now trading at a forward PE of 48. So it is suitable only for investors who have a lot of risk tolerance. But why some investors are willing to pay that kind of price for the stock? It is because of this expected EPS growth of 32%. Now, as I mentioned, the company reported excellent results. So let's take a look at detailed estimates. So here you see the surprise of about 35% positive surprise in earnings. And you will see that analysts have been raising their estimates for the current quarter, current year, and the next year. 14 analysts have raised their estimates since they reported their results, and you will see that estimates have gone up significantly. Now, looking at the longer term price consensus and EPS surprise chart, looks beautiful. All green arrows. The company has not missed in the past 5 years. Always it has managed to beat the Zacks consensus estimates. This is a relatively new company. It IPO'd in 2012 and then about a decade of losses, and now it has started reporting profits, and that is why the company expects its inclusion in the S&P 500 index. And being a Zacks rank #1 stock with very strong growth potential, it is definitely worth a look. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. Make sure to subscribe to our YouTube video channel so that you do not miss anything. And we will see you next week.